Hey everybody, how are you? John here, Johnny Investor Howard. I've found another. I just love listening to Warren Buffett talk about Bitcoin. It's definitely entertaining. Now, keep in mind, I am very neutral on Bitcoin. I just really have been doing a lot of research, and I personally have about 2% exposure to something called GBTC is the symbol, and that's Grayscale Bitcoin Trust. That is about a $6 billion market cap, and it's the one that the Guggenheim partners had recently invested about 500 million into. And that's really it, right? And then also Cathie Wood and ARK Invest, they have about a 4% plus, a little bit more than a 4% position on GBTC in their next generation internet ETF. Okay. So again, I'm pretty neutral, but I do really find it entertaining to listen to what Warren Buffett has to say about it. So we're going to go hop over to the clip here. And then also after that, I'm going to go into actually a video I did on Cathie Wood and her, Cathie Wood talks about her bet on genomics. And then also she talks about the top holdings, of ARK Invest, and also talks quite a bit about Bitcoin and some of the challenges that they faced when they invested in Bitcoin directly with the IRS specifically. And we're going to see if she talks about GBTC, but she talks about those challenges with Bitcoin.
Loud about what they heard. What is it about Bitcoin that gets you guys so fired up?
Well, when you buy a farm, you look at the crop every year and what prices are, and you decide whether it was a satisfactory investment. I mean, you look to the asset itself and what it produces for you. When we buy a business, we look at what the business earns and decide how we feel about it in terms of what we paid. But we are buying something that at the end of the period, we not only have what we bought in the first place, but we have something that the asset produced. And when you buy non-productive assets, all you're counting on is whether the next person is going to pay you more because they're even more excited about another next person coming along. But the asset itself is creating nothing. One of the interesting things, for example, is gold. If you go back to the time of Christ and you look at how many hours of labor you had to give up in order to buy an ounce of gold, and you take it forward to now, you'll find the compound rate maybe a tenth or 0.2%. And then you have to insure it during that time and make sure somebody doesn't steal it from you and everything. But it doesn't produce anything. And productive assets, you can pay too much for a productive asset. But I bought a farm in the 1980s, and every year look at how much it produced the way of soybeans and corn. And at the end of that period, I've still got the farm, and I've gotten some significant income off of it. Apartment house, operating business. But if you and I buy various cryptocurrencies, they're not going to multiply. They're not going to be a bunch of rabbits sitting there in front of us. They're just going to sit there. And I got to hope next time you get more excited after I bought it from you, and then maybe I'll get more excited and buy it from you. And actually, we could sit in the house by ourselves, and we could keep running up price between the two of us. But at the end of the time, there's one Bitcoin sitting there, and now we got to find somebody else, and they come to an end. I mean,
that's a greater fool theory. That's what you're saying.
Well, yeah, it's buying something because you expect the pool of people who want to buy it because they want to sell it to somebody else will grow, and it's wonderful because it does create a rising price. Does create more buyers, and people think I've got to get in on this, and it's better if they don't understand it. That's the other thing about non-productive. If you don't understand it, you get much more excited than if you understand it. I mean, if you buy a bond that says it's going to pay you 4% a year, you're not going to get any pleasant surprises. She's going to pay you 4% a year. But if you can have anything you want to imagine. If you just look at something and say that's magic, you can do it with shark's teeth or seashells or anything. And they did it with tulips in the 17th century in Amsterdam, and they'll do it again. I mean, people, they like to speculate, they like to gamble, and if you can get something, particularly if you have something half plausible going on, if you had bought gold in 1942 and you say, we might lose the war and we might have to run off to some other country, and so let's put our assets in gold, you would have less than a penny for every dollar you got from owning stocks. Less than a penny. Now, if somebody calls that a store of value, I mean, I think they're delusionary.
Okay. Andrew has a question, too.
There you go, guys. From 1942, you bought gold less than a penny for every dollar of stock. So, you know, I would love to hear your thoughts on Bitcoin. You know, personally, I mean, I don't know. I keep spending a lot of time researching it, trying to understand it, trying to make sense of it. You know, I just did a video recently on the Winklevoss twins. They think it's going to be a 9 trillion market cap, which would equal gold. And at that place, that's at that level, that's, you know, according to them, 25 to 40x of right now, and which, you know, would be about almost half of what the S&P 500 is. That doesn't really make a whole lot of sense to me, but, you know, I'm very interested and I'm motivated to, you know, understand what's going to happen with Bitcoin. So let's take a look real quick. I got another video I'm going to show you. This is actually Cathie Wood, and this is the genomics. Basically a video I did where she talks about genomics and then the top holdings of ARK, and then also she talks about Bitcoin, how they got in and they learned some complications with respect to the IRS and their investment in Bitcoin.
White papers on Bitcoin, but so far as I can tell, there has been no Bitcoin in the ARK Innovation ETF for more than a year and a half. How come?
Yes, well, we put it in at a 1% position in 2015 when Bitcoin was $250, and we scaled with it. We didn't sell it at all, so it hit 10% of the portfolio. At which point we were forced to sell, and at the same time
Take a note, everybody. So she's saying they're forced to sell at 10%. So that's, I guess, a policy of their fund. You know, whatever fund that this Bitcoin was in, they were forced to sell because they can't have more than 10% exposure in any one investment.
There was some forking taking place, so we were getting distributions. And what we learned is that Bitcoin threw off what's called unqualified income, which is not illegal, but from an IRS point of view, if our portfolios generate more than 10% of gross profits in unqualified income, which is usually commodity-like income, the IRS allows that 10% and then will confiscate the rest of it. So if we moved into a black swan event where the equity markets imploded and Bitcoin took off, our clients would be able to keep only 10% of that gain. And we just thought this was too much of a risk from the fiduciary point of view to subject our investors to. So what we did is we moved out of it in early 18, better lucky than smart, because
Full of bullishness?
we are extremely bullish. Our confidence in it has gone up since 2017, because what we saw as it dropped from 20,000 to below 4,000, it actually got well into the threes, I think in 2019, was that Bitcoin's share of the crypto asset ecosystem moved from the low 30% chain is the most secure. Oh no, not at all.
Famous, but it also...
So there you go. That is the... So there, that's me talking on the previous video. But basically, that's some input from Cathie Wood, of the CEO of ARK Invest, on Bitcoin and their experience. Now, you know, I can't conclusively say that, you know, as an individual, if you invest in Bitcoin, you're going to have that issue with the IRS. They're a fund, so they have certain, you know, tax realities with respect to the IRS, and that's what happened to them. So basically, anything more than 10% of the gains, you know, the IRS was going to confiscate. So basically, as you basically could see, or from the interview, that they're not investing directly in Bitcoin, but they do have a 4% plus exposure to GBTC, which is Grayscale Bitcoin Trust, which is about $6 billion. And again, that's the one that the Guggenheim Partners invested in recently, about 500 million. And then I also have about a 2% exposure to GBTC as well. So let me know your thoughts about Bitcoin. I'm continuing to study it, analyze it, and really, you know, try to get a feel for, you know, what I'm going to do with Bitcoin and how to take a look at it for the next 5 to 10 years. Okay, guys. All right. So also, I came out with a credit and an instant credit and a wealth blueprint. I should say a wealth and instant credit blueprint. I cover online investing, online income, credit, of course, financial independence. And I also have got a guide on there, okay? I got all the U.S. Companies, all the companies in the U.S. that offer a free credit score, plus all the companies in the U.S. that offer a free FICO score, plus the corresponding bureau of that FICO. And it's only $7. Okay, and also you can make money from your social media profiles, or kind of if you have a business or whatever, you come in and you can just learn how to optimize your social media profiles. You can partner with me and the world record holder for the fastest website funnel to hit $1 million. That record is 28 days. And you can basically come in and clone our funnel, and with only 9 minutes of training, and be off and running with that funnel. And that funnel is constantly optimized, and our funnels have generated 20 million in revenue. So if you have any questions, let me know your thoughts about Bitcoin. I really want to hear. Okay, have a great week.